What this is very clearly emphasizing is that the interference in the market mechanism is leading to unintended consequences. And I think that this is a microcosm example of what we get when you interfere with the market mechanism. And that has to be viewed as well from what the impact of tariffs is going to be. There was the expectation, the promise that if you impose a lot of tariffs, you're going to jump in income. Well, what instead we're starting to see is that a lot of governments and businesses around the world just don't want to have to use dollars anymore. One of the primary reasons why they were using dollars in the first place was because they were trading with the USA. And we're seeing a lot of migration now, where companies are starting to split up. Now, let's consider that there are two Mercs. They used to be the same company, and they split up in response to the World War. So one was the German version and one was the US version. And they're still separate companies. Well, we're not quite seeing companies split up. But what we are seeing is that some companies are saying that if tariffs are going to be an issue, then they will reprioritize their spending and try to grow their international businesses so that they will be manufacturing abroad and selling abroad, and they will deprioritize spending on marketing domestically. And that certainly looks to be the case for Nike. Well, that's not splitting the company up. That's simply reorienting where they're going to spend money. Now, that's an unintended consequence of the imposition of tariffs.